Stocks trade in the green after US equities gain on renewed tech buying. Metals, financials and industrials notched some gains while FMCG and IT drag.
Following advice from the Ministry of Coal to list subsidiaries, Mahanadi Coalfields and Southeastern Coalfields, Coal India's board has given its in-principle approval to the listings. The news lifts the stock.
RBI claims the bond market with a liquidity bazooka of rupees 2 lakh crore of bond purchases via open market operations in 4 tranches. It also announces a $10 billion rupee swap. Experts welcome the move and see yields tempering.
Gold scores its 51st high of 2025, stamping $4,500 an ounce and clocking its largest annual gain since 1979. Silver too surges past $72 per ounce to a new high, and platinum records a new all-time high over $2,385.
And in a departure from the earlier pure lottery system, US will issue H-1B visas based on a weighted lottery method that prioritizes qualified and higher income applicants starting from February 27th, and has seen limited impact with the move on Indian IT majors. Welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. Hey girls, we are in the perfect Christmas colors. Actually, all of them are here on the screen as we speak. But for the markets, looks like it is in a bit of red and green. We have, of course, come off from the highs of the day. For the Nifty, it's an 11-point uptick, but we are almost off around 50 points from the day's high as well. And the mid-cap index, that too has slipped into the red. It has been quite volatile since we started the day and is now at the day's low. Did see some recovery from there and is off from the highs again. Bank Nifty absolutely flat with some positive bias, and we do have some stocks or some sectors like Nifty Realty. We do have the small cap index which are in the green, but overall the markets have come off sharply from the highs of the day. We'll have to see whether this dip gets bought into or not. For now, the texture of the market volatile and off the highs.
Well, yes, absolutely. Consolidating at this point in time, we just about have the Nifty, which is up by around 16 odd points. We have the Bank Nifty, which is just about higher by around 40 odd points. So just about biding away time, considering that we do have this entire vacation season. Even yesterday, the markets just about consolidated, and that seems to be continuing today.
Absolutely, that seems to be continuing, and seems like FIIs also continue to sell, because yesterday also FIIs were sellers. Advanced decline ratio, though, you can see that line, Ekta was also mentioning, it's nearing, maybe we'll see a crisscross through the day, but that's something that we'll have to watch out for. A lot of movers that are coming in from the broader end of the market individually. You have JBM Auto that's managing to hold on to strong gains of 10%. Apart from that, look at Hind Copper, 5-6% of gain there. We have the gold financiers that are trending away in today's trading session. So the star that's missing, or the glitter that's missing on the Christmas cheer or the Christmas clothing right now, gold financiers surely are doing the job. Manappuram Finance, Muthoot Finance, keep an eye out on those names as well. And seems like we've seen some bit of an up move. Obviously, Ajanta Pharma on the back of news flow is also managing to hold on to gains. But, to take us through more individual stocks which are buzzing around in trade today, let's go across to Vivek for that.
Well, thank you so much for that. When you're looking at the broad end of the markets, the advance decline ratio continues to remain quite favorable, especially when you're looking at the advances. NSE 500, quite a few stocks moving higher, and decent volumes in some of the, the better traded names. In terms of individual stocks that we're tracking, can't look past VIP Industries, almost 26% block deal happened. The Piramal family has trimmed stake as per our sources, and that particular stock higher almost 7.5% today. Vikran Engineering, a large order win coming in after a while. Almost 2,000 crore worth of orders is what the company has received today. That particular stock, one of the top gainers in the broad end of the market, over 12.5% higher. Coal India, up for the second straight session yesterday, was the top Nifty gainer. Today, higher by another percent, on the back of the fact that there could be value unlocking. That could happen on the back of the fact that you're seeing listing of 2 of its subsidiaries. JBM Auto, like you just mentioned, top gain on the NSE 500 index. Volumes very strong in this particular name. And Muthoot as well as Manappuram Finance. Manappuram Finance in particular doing very well. Remember, gold prices continue to surge to record high levels. Of Manappuram up over 6% today. On the other hand, quite a few laggards as well. Well, you can't look past the IT names. A lot of tweaks regarding H-1B visa and how exactly the approval process will now go about. whole host of names under pressure. Coforge down for the second straight session. Sun Pharma, yesterday we did highlight the fact that one of its largest drugs, Ilumya, could come under a bit of a pricing cloud. On the back of that, Sun Pharma has extended its decline today, down over 1.5%. Avanti Feeds, one of the top laggards as far as the NSE 500 index is concerned. And Kajaria, remember, last couple of weeks has been extremely volatile for this particular name. Today, 2 down on decent volumes.
Okay, all right, Vivek. Thanks very much for that. Well, Ajanta Pharma is the first management on the show. And remember that they are in focus. The stock is up around 4 to 5% as the company has signed an in-licensing agreement with Biocon to market semaglutide, which is basically the generic version of Ozempic as well as Wegovy, which are the blockbuster weight loss drugs by Novo Nordisk. This is in 26 countries, which is across Africa, West and Central Asia. To talk more about it, we have Yogesh Agarwal. He's a man that you don't see very often on television, the managing director of Ajanta Pharma, joining in. Mr. Agarwal, thank you very much for taking the time out. Well, definitely good news that you've signed up with Biocon with regards to semaglutide and to market it. But how much are you expecting to potentially make from this particular tie-up? The reason I ask is that, yes, there is, it is going off patent in March. You do have a very strong holding in the countries that you do have a tie-up for. But semaglutide as a whole is possibly taking a back seat. One, you have Mounjaro generic, which is, Mounjaro, which is possibly seen more efficacy. Plus, we have the oral version of Wegovy as well as Ozempic, which is now going to possibly hit the markets as well. So in that context, what are you anticipating in terms of competition?
Okay. No, thank you, Ekta. Thank you for having me. We are truly very excited about this partnership with the Biocon. We all know that GLP-1s, which is semaglutide, which is Ozempic and Mounjaro, they are currently the blockbuster drugs. We have seen the demand like no other product in the history for these two compounds, which are for diabetes and weight management. Already the semaglutide is almost 26 billion globally. Mounjaro, which is almost 30 billion. So $55 billion market, growing at mid-teens to high teens. So in 5 years, possibly, this market we are looking at doubling. So it could be a $100 billion market globally. So it's a huge opportunity, and we are truly excited about this partnership with Biocon for a very large number of countries where we have a ground presence. Just to share with you and your viewers, we have 2,000 plus medical representatives outside of India, which are spread across Africa, Central Asia, Middle East, and Southeast Asia. So we have a very wide reach. So that is what Ajanta brings to the table. And we plan to start filing the dossiers for this product in the quarter starting April. Hopefully, we should start getting some approvals toward the end of the year for the FY27. But I think the bigger uptake on this product, which we'll see, is in the FY 2028. So still, the semaglutide is one of the most preferred GLP-1s in the market. The oral tablet, which you have mentioned, that is still about 8 to 10% of the semaglutide. So still the preference is towards the injectable dosage form. So we are really very, very excited about this partnership.
All right. Just give us a sense in terms of the financials for this particular tie-up, as well as whether it's exclusive to you all. Or can you tie up with other companies? Can Biocon tie up with any other company?
So for out of the 26 countries which we have tied up, for 23 countries, we have an exclusive tie-up with them. And for 3 countries, it is semi-exclusive, so which means they can either come themselves or give it to one more people. So it is not that for those 3 countries also they can license, they'll be able to license to many players. So to that extent, we feel that it should remain exclusive to Ajanta. It's a very complex product. It requires a dedicated facility. It requires a device which has to be approved by the FDA and regulatory bodies. So we feel that going forward, there are only less than a dozen companies globally which will have this product. So in the emerging markets, we feel where we are present, it should remain a limited competition kind of product. And since we have such a large ground presence in this market, we are looking forward to getting a good market share for this product in these countries. As far as the commercials, they are confidential, so I'm not able to share much light on the commercials of the tie-up.
So, Mr. Agrawal, actually, that was going to be my next question. Is there a royalty in place? Will there be an upfront payment that you'll have with Biocon? I know you cannot give us details, more details there, but if you can give us an idea whether you will be making some payments to Biocon, considering the big market share that you're talking about here.
Yeah, there is a composition. Of course, any type of like this, it has a milestone payments on signing of the agreement, on the approvals of the agreement. So there'll be some milestone payments, and then after that, there are certain other commercials which we have structured, which I'm not able to share with you.
Okay. Sure, Mr. Agarwal, you spoke about the global, market size of semaglutide and how you expect it to grow to 100 billion. But for the markets where the 26 countries that is there right now in terms of this tie-up, what is the market size over there potentially? And also, how are the pricing in this market? Is it any different? And, you said not much competition, but innovators, what is the presence there?
So innovators are present in these markets, and we see they are growing very, very fast. They're exploding, I think, in all these markets where we are present. So since there are not a very deep IQR data which are available, our estimation is there should be $1 billion plus market which is there for this GLP-1s in this market. So that is where we are looking to capture this market.
Okay, so Mr. Agarwal, you're not going to be making semaglutide on your own. You're just going to be a marketing partner.
That is right. That is right.
Okay.
So Biocon is an excellent technical expert company. They have this product.
No, what I mean is that are you going to eventually produce the molecule, say, for any of the markets on your own? For example, have you filed for Canada? Have you filed for India? Or will you just be a marketing partner to, say, other companies for their molecule?
Correct. That's right. That's right. We will be the marketing partners for the company, for Biocon, for the emerging markets.
All right. What is your plan for India and the semaglutide launch in March?
So India, the product is going to go off patent in March 26, which is just 3 months away. And we plan to be one of the first wave launches in the country.
Okay. And what about Canada? Because that goes off patent on the 4th of Jan. Are you participating in the market in any way, maybe even as the second filer?
No, Canada, we don't have a tie for Canada or any other market. So this is mostly for the emerging markets where we have a ground presence, and it will be a branded generic business.
Okay. And are you looking at generic versions of Mounjaro, which you would possibly be filing for on your own?
That is still a bit far away. I think the product, the patent for that product is going off patent around 2033. So we are still looking 8 years out. Our plan is to be day one in the market and launch on the day one when the product goes off patent. Whether we will tie up with some other company or whether we will do it with ourselves, I think that is yet to be seen. But we definitely will be there in the Mounjaro also on the day one.
Mr. Agrawal, from an investor perspective, if somebody is reading that news, they would like to understand what is the impact on P&L. You did say that it will contribute significantly in next 3 to 5 years. When do you start expecting the revenues to hit into your P&L? And what kind of margins will you see versus the existing portfolio that you have?
As I said, I think end 27, we should be starting getting some approvals. And since the tie-up is for 26 countries, the approvals will start trickling in 27, 28. So it's not one country where we have a tie-up and we'll have one big market. So as we get the approval, we'll start launching. And for the branded generic business, it takes a little time for the ramp up. So we should start seeing the benefits in the 27, 28, then further going out into 28, 29, 29, 30. I think the 27, 28 onwards, next 3 years is where we should start seeing the benefits of this product in the P&L as well.
Okay, next 3 years is when you start seeing the benefit. And, there are some commercials or some terms that are there, but anything in profit sharing that you will start with Biocon, or is it just going to be milestone payments?
I think that is too granular of a detail. I wish I could share with you. I think let's leave it at that. Yeah.
Okay. All right, Mr. Agarwal. Are you sticking to your guidance then for FY26, or are you possibly going to exceed it based on tie-ups that you're seeing?
No, 25, 26, already half year is gone. We have, I think, delivered good set of numbers. We have posted the mid-teens kind of growth in top line and bottom line, which is the guidance we had given at the beginning of the year also, that will deliver the mid-teens kind of result for the whole year as well. So I think we are on course to deliver that kind of numbers for the current year.
All right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in. Well, definitely the market continues to just focus on the semaglutide opportunity and all what is taking place within that in the next couple of months. That will be the big talking point. Thanks very much for joining in and speaking with CNBC TV18. Well, for the markets, it's absolutely flat, but we have Ajanta, for example, which is holding up with a gain of around 3% and other stocks which are, buzzing around. So we'll do one thing. We'll take a short break. Up next, we will connect with Sandeep Gogia of Equirus Capital as the US scraps lottery system for H-1B visas. More on that once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. Now let's put the spotlight on IT stocks, right? And this has come in after US has announced a major change to the H-1B visa program, replacing the long-standing random lottery system with a weighted selection process. Rima is joining us now to first give us details on this front. Rima?
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
Thank you so much, Rima, for joining us with all those details. So let's discuss more on this. We are now joined by Sandeep Gogia, who's the MD and Sector Lead, Tech and Digital at Equirus Capital, to understand the larger impact on the sector and, if any, individual companies as well. Sandeep, good afternoon. Thank you so much for joining in. Well, we heard the commentary coming in from IT companies as well. Minimal is a word used by a lot of them, 1%, 2%, not more than that on H-1B visas. What's your take on this change that has come by? And do you think it could impact the industry, if not these big companies, but the mid and small size IT companies a lot?
Hi, good afternoon. So I don't think it'll have a kind of a very large kind of impact, and I'll stick to that minimal that you also heard earlier. So look, what will happen is that a lot of these companies will start hiring locally, right, rather than kind of using this route to send people outside. And second, I see a lot of work getting offshored, right? So I think with a mix of these two, I also believe that the impact won't be kind of a meaningful or a material impact on the margins for the whole industry.
All right. Well, Sandeep, in terms of the statistics, TCS only had around 500 H-1B travels in the year gone by. Infosys also said it was a minority. Wipro said over 80% of the US workforce is localized. How much of that trend do you expect would possibly now increase? Does 80% go to 100%? Does 500 go to, say, 100? What are you expecting now in possibly FY27, FY28?
So look, this will reduce further. There is no doubt. And as I look, if you look at both the 2 points that I made, A is more work will get offshore, so that reduces the requirement to actually have more H-1B visas. And second is if you hire locally, right, in US, green card holders, citizens, so that further kind of reduces the need, right? So I think both of these put together, overall the industry will kind of start reducing their dependence on this visa.
Okay. Sandeep, do you think specifically when you look at Emphasis, they have said that very minimal, right? And even Persistent has said that they were never dependent on H-1B visas. Do you think that mid-tier IT companies will have an upper hand over large cap IT companies? Overall impact is minimal, but comparing the large and the mid-cap size then?
So yeah, I don't think it'll have a meaningful impact on either of those two set of organizations, right? Because the mid cap, let's say, is now still about billions of dollars of revenue, right? They're meaningfully large organizations now, and given their scale, I think they have the flexibility to kind of manage this successfully with little or no impact.
So Sandeep, just an industry-wide conversation on that then. Do you think Indian IT companies will invest more in upskilling talent because now it is basis skills, it is not a random system anymore, and that is where most of their expenditure would go?
Absolutely, and that's already happening, right? And then AI, in any case, is a driver, one of the drivers for that, wherein both the mid-tier as well as the top-tier organizations are kind of spending a meaningful amount in terms of upskilling, training their employees to get them up to speed with the new age, the requirement of using and embedding AI in the work that they offer, because the client is expecting some productivity gains and then passing on some of those gains to them, right? So as a result, there is active kind of spend, right, and engagement happening on that side.
How are you placed then, Sandeep, for IT stocks going into FY27, where we would possibly get more structural leads in terms of where the winds are blowing when it comes to the Trump administration as well as AI?
So I think there are green shoots that are emerging. If you look at, let's say, the CY26 or the FY27, right, we see that the banks, which is the BFSI sector, they've already started to open up their wallets in terms of their budgets. And with clarity emerging on the tariff side, gradually, right, even the manufacturing sector is expected to kind of follow suit. So the growth will stay muted, but the expectation is that it will be better than the last couple of years, right? Both of which have been pretty muted, right?
Okay, better than the last couple of years. So maybe a mid-single-digit growth, I believe, is what one could see coming in, right?
Yes, mid to high single-digit growth.
And also, what is your pecking order in the IT pack, large cap, mid cap? How are you looking at the IT?
So look, the mid cap is obviously they're more nimble-footed and they're more specialized in terms of their offerings. So yeah, I would therefore kind of pick a mid cap over a large cap today.
Okay. Sandeep, last question before we let you go, because the next big talking point has been AI. But the other grouse, I would say, that the industry or the market generally has, that there are not enough AI investments made by IT companies right now versus what we are seeing abroad, be it the US or be it rest of Asia versus what's happening in India. Do you think this is something which the market will be watching out for, the kind of investments that are being made by these companies into AI, and that could be the next trigger to watch out for in the industry as well?
Yes, I kind of agree, and I see why this has not happened so far is because the adoption of AI on the enterprise side has been limited as compared to the adoption on the retail side of things, right? And there are data privacy concerns, there are hallucination concerns, there are cybersecurity risks involved, right? So as the enterprise clients start adopting that kind of to a higher degree, I see kind of in parallel that will happen right on the IT kind of side of things as well. So both of these have to go hand in hand, right? And then second is the capex that is happening on the AI infrastructure is large, and then that will follow the services cycle, right? The investments on the services side of things, right? So with these two, I believe there is a strong upside that we will see over the next 2 to 3 years, right? With adoption of AI, increasing adoption of AI by enterprise clients.
Okay, all right, Sandeep, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us that perspective on the IT space. The stocks are not that perturbed despite the changes which have taken place in terms of the H-1B visa, simply because they have been reducing the amount that they utilize the H-1B visa for in the US. We'll take a short break, but up next, Sudeep Shah of SBI Securities will join in. He has some trading strategies on the other side. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Just wanted to point out that the two stocks which are under pressure in today's trading session are Sun Pharma as well as Dr. Reddy's. So Dr. Reddy's is down around 1.3%. Sun Pharma has also lost around 1.4%. Remember that the big development which is going to take place is semaglutide is going to go off patent on the 4th of January in Canada. So the street was awaiting possibly any kind of news in terms of an approval, considering that we are going into Christmas break and then, it's closer towards the 4th of January. I think the street is a bit cautious in terms of what could happen. Remember, Dr. Reddy's, it was already known in the month of October that they have received a regulatory update from the Canadian authorities, which was negative in terms of an approval for their version of semaglutide. So the street was already expecting a delay for Dr. Reddy's, but maybe now there is a fresh renewed amount of a sentiment negative as the date for semaglutide going off patent is now coming closer. But now let's go across to Mangalam. He joins in. He's going to give us an update in terms of what's taking place on the F&O desk. Mangalam, over to you.
Well, the market is off highs, and at high levels we are seeing some supply coming in, even as there is support at the lower levels. That's the kind of texture that we are in right now for the market. So the Nifty Bank, the mid-cap index, all of them, marginally off highs. And the mid-cap index, when I last checked, was also in the red. And all of that is also reflected in the kind of advanced decline ratio move that we've seen. So the advanced decline ratio, when we started the trade, it was almost 1,800 stocks in the green for about 1,000 in the red. Now, as we speak, they've come fairly close, around 1,500 in the green for about 1,300 in the red. The Nifty Bank, the 20-day moving average, is an important level for the Nifty Bank. Cross past that, staying and closing above that will be extremely crucial. Right now, it's hovering just close to the 20-day moving average. Outperforming indices in this market, we do have the metals pack doing well. Overnight, we saw a big surge across a lot of the metals. Autos are doing well, and the financials. The RBI's open market operations, liquidity easing measures doing well for the financials more than the banks itself. We're seeing the 26,200 call and the 26,200 put, both of them extremely active in trade. So the 26,200 call has seen some writing, as has the 26,200 put. Both of them tell you that the market's in this 26,100 to 26,400 sort of range right now, rather 26,100 to 26,300 sort of range right now.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on that and the levels over there as well. But let's also bring on board now Sudeep Shah, who's the head of technicals and derivative research, SBI Securities. Sudeep, good afternoon. Thank you so much, as always, for joining in. While today is a bit of a dull day and not much of an up move that we're seeing, 26,000 around the 26,200 level actually is what the Nifty is managing to hold on to, right? What should we keep an eye out on? And if we manage to close at 26,200, would we see a better run-up coming in for the markets in the near term?
what we feel is that yesterday and today, both sessions, we are seeing some kind of a lackluster, reduced interest in trading. If you see, the volumes are low. But what is more important and heartening is to see that 26,100, 26,130 zone is held, and any dip towards that zone is being bought into. So we feel 26,100 now remains an important support on the downside until the time this zone holds. And upside up to 26,400, 26,500 cannot be ruled out in the coming few sessions, maybe in the early part of the next week. And even Bank Nifty too. So 58,800, 58,900 zone on the Bank Nifty also will act as a strong support. And we see levels of 60,000, closer to 60,000 being achieved in the next coming few trading sessions.
Okay, all right. Well, Sudeep, wanted your thoughts on stocks such as Coal India, whether you're looking at that?
Yeah, see, the Coal India after several weeks have shown some kind of a momentum uptick. Now, if you see, the stock has been in a range a bit right from April 2025 until now, and that this has been a range breakout, biggest consolidation breakout, because in the past for more than 6 or 7 months, Coal India has never been in such kind of a trading range. So we see this as a good opportunity on the upside. Now, key levels to watch out on the downside here would be around 388, 390 levels. So till the time 388, 390 holds, this move on the upside could go up to around 430, 435 levels in the coming few months.
Okay, 430, 435 levels in the coming few months is what we could keep an eye out on for Coal India. But Sudeep, what are your top bets just before Christmas? What should we keep an eye out on?
Yeah, so there are a couple of them. One is from the mid cap space and one is from the large cap space. Now, large cap one is M&M, Mahindra and Mahindra. Immediately post Christmas, there's a new car launch that is being planned in the first week of Jan, and here we feel that steadily the stock is in a decent uptrend, has taken support around 35.50, 35.60 in the last few sessions, and now we feel that this is a very good entry point to capitalize on the long-term uptrend. And we see levels of 3800, 3850 in the coming few weeks. On the downside, the support zone will be 3550, so that can act as a good stop loss. The second one is from the cash segment, which is Pondy Oxides. Now here the stock has given a decent breakout after a consolidation of since last week of November. So what we feel is in an overall uptrend, there was a small consolidation, small corrective move, which has now been reversed, and we see levels of 1500, 1550 here in the coming few months. On the downside, 1360 will act as a strong support, which also can be a stop loss.
Okay, all right, Sudeep, we're going to let you go on that note. Thanks very much for joining in and taking us through those technical calls that you have for today. We need to take a short break, but do watch out for stocks such as Hindustan Zinc, which has now gained 41% this year and is up another 3%, mirroring what we are seeing in terms of silver prices. We'll take a short break. Manisha Gupta will join in. She has with her Surendra Mehta of India Bullion and Jewelers. Stay tuned.
Welcome back. Joining us now is Surendra Mehta. He's Secretary, India Bullion and Jewelers Association. Mr. Mehta, hi. Thank you so much for joining in. And it's an insane rally. And we are part of a couple of group chats where you keep telling us, I told you so, because yes, you did talk about these numbers way back. From where we are standing right now, what is your sense on what the markets can look forward to in the near term, next couple of quarters, let's say?
First, let me speak about silver, because silver I was always bullish. And naturally, on the group chats, I have always stated that silver can touch $75.
Yes.
We'll have to understand one thing, that I was constantly following the lease rates on silver. The lease rate in few cases have been as high as 23 to 24% as of today also. So where is the weakness in silver? There is no weakness. Apart from this, there have been a lot of paper silver which was being sold and which is now being which is now getting converted into a physical silver. So all this is making a huge rally for silver. If you look at 21st November, the silver was $49. Today it is almost $73. So this kind of jump, I think, were inevitable because all the banks, all the big fund houses have started adjusting their position and are moving out of the paper silver.
They clearly are. What is life looking like beyond 75?
I think in 2026 we may see something between $95 to $100. I'm slightly pessimistic on that. We may see more, a much bigger number than this. But as of now, I can see at least $95 to $100.
Do you want to tell our viewers that there could be some correction as well, and they will get an opportunity to buy?
Absolutely, the correction are inevitable. Silver, since it has rallied more than 50% in just 1 month, I think the corrections are inevitable, and we must all be prepared for the correction in silver by at least 18 to 20% and correction in gold by at least 9 to 10%. As far as gold is concerned also, I think we might see something like 4,900 to 5,100 by 2026. But as I said, the corrections are inevitable.
Oh, absolutely. Mr. Mehta, the other thing really is about with the kind of volatile and high moves that we have seen, and that's another discussion that continues to go in, and this is more industry specific really. We have seen jewelry stocks do quite well. We've seen the gold metal companies do quite well as well. But when it comes to the prices going higher, the last year books must have closed around, 70,000-80,000 rupees. This time the book closing would be at around 1,35,000 and 40,000. What does it do to the tax, the working capital, and the way many of these jewelers do source their bullion? How are you looking at those concerns building up?
See, the real problem is with the jewelry manufacturer. Let me tell you, the bullion trade is not at all on credit terms. The entire credit term in our industry is by the jewelry manufacturer to the retailer. Now, there has been a transformation that sale of 22 karat jewelry has dropped, while the jewelry manufacturers have always supplied 22 karat jewelry to retail jewelers.
Right.
So that is one problem, and because of this, since the sale has dropped by almost 35 to 40%, they are not able to get payment. The other problem is the retail, on the retail counter, there is a demand of 9 karat jewelry. So these jewelry manufacturers are forced to make 9 karat jewelry, and they have to supply in spite of not getting payment on the due dates of those 22 karat jewelry. Another problem is exchange of jewelry. The retailers are coming and exchanging their old jewelry to a new jewelry. So there is no new cash flow generation which can be paid to the jewelry manufacturer. So all this is creating a several liquidity crunch to the jewelry manufacturers. And I think the industry is entering into a bad phase, and it might become the worst in next 3 to 4 months.
Mr. Mehta, as we move forward from here, I mean, yes, this is something that we've been hearing from everybody, that almost 95% of jewelry that is being sold in India is hallmarked. Some quantities, smaller pieces, some geographies, maybe not. But the bullion hallmarking, you've been talking about that for some time now. And with silver, if I'm going to buy 1 kg silver at 2,30,000 rupees without a hallmarking, without a purity certificate, that also seems to be becoming a concern.
No, Manisha, we have already approached BIS, and we are looking for India Good Delivery BIS hallmark silver. And I let me tell you, that would be a reality very soon, like the India Good Delivery gold. And also we have requested BIS to mandatorily go for silver hallmarking, like the gold hallmarking, or at least if there is not enough infrastructure for silver hallmarking, I think the government needs to mandate that on every invoice there has to be a caratage, silver caratage mentioned, along with, if possible, any kind of self-HUID or some other number, so which can identify who is the purchaser, who is the jewelry manufacturer.
Okay, all right, Manisha, thanks very much for bringing in that conversation. So 90 to 100 is what we can expect in terms of silver prices soon enough. or maybe going into next year. So let's see whether that takes place. It's been a stellar rally for silver prices, as we all know. But important news which is coming in for Castrol India, as you can see, Castrol India, there is going to be a tender offer which is going to take place after the Castrol deal is complete. Now, the deal is that BP is going to be selling 65% stake, which is basically majority stake in Castrol, to a company, Stone Peak, which is a US-based company. So the entire deal is worth around $10 billion. And what is going to take place in India, where the majority holding is in fact held by Castrol Global, around 51% stake, is that there will be a tender offer which will take place. That's the reason you're seeing the stock spike up. In fact, the stock was just about higher by around 2% till the news of the tender offer came through. And now you can see that big spike which has come through for Castrol India. Remember that this is basically after the entire deal takes place. There will be a tender offer which will take place for the Indian arm, Castrol India. As you can see, that stock is at around 195, 194 odd rupees, reacting to this piece of news. The deal itself on a global basis is worth around $10 billion. And they're possibly going to receive around $6 billion in terms of proceeds. That's what reports have indicated. And remember that this will be one of the...
Yeah. 6 billion. It's 6
so
billion.
This would be one of the largest divestments which is taking place in Castrol's history, reflecting BP's pivot to streamline its business and basically cut debt. But the big news coming in for the India entity is that there will be a tender offer after the global deal culminates and is completed. More details which are flashing on your screen at this point in time. Following a 2-year lock-in, I think there is an optionality to sell another 35% stake. But as of now, this is the big deal which is taking place. And as you can see, the stock is reacting handsomely to that news about the tender offer. The stock, as you can see, is up around 6% at this point.
Absolutely important, right? Because all these minority interests in countries like India, Castrol India is there. There is Vietnam, Saudi Arabia, Thailand as well. So because of that, this transaction includes these minority interest companies, and that is why that open offer, the tender offer that comes in as well for Castrol India, like Ekta was mentioning as well. But on that note, we're actually going to slip into a very short break. After the break, we'll get you more stock-specific action.
Welcome back. Well, for the market stable, but we do have a lot of stocks which are buzzing around. And as you can see, Manappuram is at a fresh high. Remember that there is that OMO which was announced by the RBI, which would give a liquidity boost. So it is aiding financials, but separately also we are seeing buying in a lot of these NBFCs coming through. But just keep your eye out on Castrol India as well as the news flows in. So that should be something that we will be tracking quite closely. But Cholamandalam Investment is the other stock in focus after the management dismissed the allegations by Cobra Post on irregular cash levels, suspect related party transactions and other issues flagged by Cobra Post. Listen in to what the management had to say.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality, and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations. FY22 we started because the regulation also required, and we started including them. So that is they are playing on this regulatory requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is again below 26,200 levels. Just 12% gain is what the Nifty is holding on to. So really, off the day's highest point is what we're seeing for the Nifty 50. Nifty Bank is also very muted. Lackluster day today, as at least what we're seeing so far for the benchmark indices, as well as Nifty Bank. Mid-cap not doing anything great as well. So it's a bit of a muted day today. But with that, we'll wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, a business lunch to take you through all the action on the market front going forward.